Good afternoon, everyone. This is Michael Morris, the Executive Director of the National Disability Institute. I'm glad so many people have joined us from all across the country. This webinar is dedicated to bringing all of us up to date on implementing ABLE, the Achieving a Better Life Experience Act. We all know that this was a piece of legislation worked on for so long that was signed into law in December 2014. 2015 was the year of regulatory development and states passing their own statutory authority across the country. And 2016 is the year that ABLE programs will be opening in some states, but because of changes that you will hear about, will make people with disabilities who are eligible to open ABLE accounts regardless of where you live. So let me first turn back to Brittany to share with you just some of the logistics of listening to this webinar. Brittany?
Good afternoon, everyone. The audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel, and if you accidentally close the panel, you can reopen by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or prefer to listen by phone, you can dial the numbers on the right side of the screen, 1-650-479-3207 or 1-855-244-8681 as a toll-free number. The meeting code is listed below, 660-348-275. Please note that you do not need to enter an attendee ID to join. Real-time captioning is being provided during this webinar. The captions can be found in the Media Viewer panel, which appears at the lower right corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize the other panels like chat, Q&A, and/or participants. For Q&A, please use the Q&A box to submit any questions you have during the webinar, and we will direct the questions accordingly during the Q&A portion of the webinar. If you are listening by phone and not logged into the webinar, you may also ask questions by emailing questions to me, Brittany Taylor, at btaylor@ndi-inc.org. Please note that this webinar is being recorded and materials will be placed on the National Disability Institute website at www.realeconomicimpact.org. If you experience any technical difficulties during the webinar, please use the chat box to send a message to me, or you may also email me at btaylor, again, at ndi-inc.org.
Thank you, Brittany, and thank you again for all of you across the country who've joined with us today for this educational webinar. I want to thank our presenters and panelists who are going to be a part of the webinar today. Chris Rodriguez, Senior Public Policy Advisor from the National Disability Institute. Heather Sachs, Vice President of Advocacy and Public Policy, National Down Syndrome Society, NDSS. Ken Brown, Team Leader at the Social Security Administration on the team that is focused on SSI income, resources, and payment determination. Marty Ford, Senior Executive Officer, Public Policy, the ARC. Stuart Spielman, Senior Policy Advisor and Counsel, Autism Speaks. And Will Thompson, Deputy Executive Director, Florida Prepaid College Board. The agenda today is going to begin with just leveling the playing field, providing some ABLE basics, understanding core components of the Act and the program that is really in its formative stages and will really become operational this year. status of federal and state implementation, notice of proposed rulemaking, as we have seen it so far in 2015, and POMS, which are the guidance that is provided by the Social Security Administration. We are then going to first, I will moderate some questions which have been prepared in advance and ask of our panelists, and we will throughout be integrating in questions which you may be offering to us that, as was explained, you can type in the chat room box on the right of your screen. So with that, let's dive right in. Let's begin with just some basic understanding about ABLE, and let me first turn to Chris to provide some of that beginning information.
Thank you, Michael. I think you're absolutely right. Before we get into the specifics and the characteristics and the regulations and the rules, and we take a look at Will Thompson's perspective from the ground, it's important that we go over some of the basics so people have the very beginning understandings of what the ABLE Act is. So the ABLE Act, its formal name is the Stephen Beck Jr. Achieving a Better Life Experience Act, or ABLE Act. The Stephen Beck Jr. Achieving a Better Life Experience Act became law on December 19th, 2014, after nearly a decade of advocacy provided by national disability advocacy organizations, state agencies, families, folks with disabilities all across the country. So in its most basic sense, what the ABLE Act allows is it allows the creation of new options for some individuals with disabilities and their families to save for the future while protecting their eligibility for means-tested, federally funded public benefits, such as, but not limited to, Medicaid and Social Security. It's important to note, since the passage of the ABLE Act, a lot has changed. We're learning new things every day, and this presentation is based off of what we know now or presume right now to be true. Okay, so what is an ABLE account? ABLE accounts are established in the new section referred to as 529A Qualified ABLE Programs. They're qualified savings accounts that receive preferred federal tax treatment, but they are post-tax dollars that are contributed to these, and they may have some state tax advantages, and we're going to get into those more specifically here in a few slides. They enable eligible individuals, which we're going to describe what that means, to save for disability-related expenses, and again, we're going to get into exactly what that means here in a few slides as well. Today, they are not currently available, but we do expect the first programs to be up and running in early to mid-2016, and we're hopeful that by the end of this year, we will have at least somewhere between 5 and 7 programs for people with disabilities who are qualified to enroll in. It's important to note that assets in and distributions for qualified disability expenses will be disregarded or given special treatment in determining eligibility for most federally means-tested benefits. Okay, so what are some of the important requirements of an ABLE account? What are some of the basic things that will be consistent across all ABLE programs, no matter where they've been founded or where they're managed? So, each eligible individual may only have one ABLE account. This is different from how we see the typical 529 college savings account, where an individual may have multiple. Again, a qualified individual can only have one single ABLE account. They cannot have multiple ABLE accounts at any given time. Another aspect that's very important is the fact that the designated beneficiary is, at all times, the account owner. Although it has been stated, and we'll get into this later, in the regulations, that there will be allowed, certain individuals will be allowed to have signature authority over the account on behalf of the designated beneficiary, but that still stands that the designated beneficiary is the account owner. Originally, these accounts required that they be established in the designated beneficiary state of residency. That's how the federal statute was originally written. In the last couple of months, an exciting amendment was passed at the end of 2015 that eliminated this requirement. What that basically means is that no matter where you live in the country, as long as you meet the criteria that we'll describe here in a little while to make you a qualified, eligible individual to enroll in an ABLE program, you can enroll in any program in the country that's up and running. The total annual contribution may not exceed the federal gift tax contribution, which is currently set at $14,000, but it can be expected to be adjusted periodically. So what this means is all contributors to an ABLE account in any given tax year cannot exceed $14,000. So if you had 2 contributors and they each put in $7,000 in a single year, you could not accept any more contributions until the following tax year. Okay, again, multiple individuals can make contributions. There's no limit to how many people or who they are. It could be your family members, your mom, your dad. You could be companies doing a match. Anybody can contribute to an ABLE account. It's important to note that the aggregate contribution may not exceed the state limit on 529 accounts. This is set by each individual state. We suspect or we believe that that limit will be the limit that's in the state in which the ABLE Act is being managed. This is typically anywhere from $250,000 all the way up to, I think, $500,000. Okay.
I'm next going to turn to Marty Ford, who is going to provide the details about who is eligible to be an ABLE account beneficiary. Marty?
All right, thank you, Michael. To be eligible, individuals must meet 2 important requirements. The first one is an age requirement, and the second one has to do with the severity of the disability. And on age, the individual must be disabled before the age of 26. That is the requirement in the law as of now, and if you're involved in the disability community, you may know that many people are working to increase that, but as it is now in the law, you must be disabled before the age of 26. In terms of the severity of disability, there are 2 ways to meet this test. The first one is to actually have been determined to meet the disability requirements for one of the Social Security programs and be receiving benefits. And that could be the Supplemental Security Income Program or SSI program, or to be receiving one of disability benefits from one of the Social Security programs in Title II. So either receiving SSI or receiving Title II disability benefits, and that might be SSDI benefits, it might be disabled adult child benefits from the Title II program. That will get you eligibility for an ABLE account. Or the other way to do it is to submit a disability certification. And that is essentially showing that you have an impairment or a disability that is essentially equivalent to the functional level of impairment of somebody who is meeting the listings level of impairment for the Social Security disability definition. And you must submit a disability certification assuring that you hold documentation of your impairment and that you have a physician's diagnosis and a signature, and that you meet that functional level of disability criteria that is listed in the ABLE Act. And what the ABLE Act essentially lists, or the regulations that have been developed by the Social Security Administration and the IRS, essentially developed a definition that equates to that level that I mentioned. And so those are the 2 ways of showing that level of severity.
Let me turn back to Chris to talk a little bit about exactly what may funds from an ABLE account be used for.
Thank you, Michael. So we've established the criteria in which it takes to become a qualified beneficiary. Now another big question is, okay, so we put funds into the account. What is appropriate for these funds to be used for? So distributions from an ABLE account may be made for what's being termed qualified disability expenses. So what does that mean? These qualified disability expenses are expenses that relate to the designated beneficiary's blindness or disability and are for the benefit of that designated beneficiary in maintaining or improving his or her health, independence, or quality of life. It's important to note that the term qualified disability expenses should be broadly construed to permit the inclusion of basic living expenses and should not be limited to, 1, expenses for items for which there is a medical necessity, or expenses which provide no benefit to others in addition to the benefit to the eligible individual. So, qualified disability expenses may include, but are not limited to, the following categories: education, housing, transportation, employment training and support, assistive technology and personal support services, health, prevention and wellness, financial management and administrative services, legal fees, expenses for oversight and monitoring, again, basic living expenses, funeral and burial expenses, and other expenses approved by the Secretary of the Treasury under regulation consistent with the purpose of the program. It's very important to note that distributions for non-qualified expenditures will be subject to tax consequences and may affect eligibility for federally means-tested benefits as well as any state-funded benefits that are means-tested that the individual may be taking advantage of.
So let's turn to the other question then, is how do ABLE account assets impact eligibility for federal benefits? We'll turn back to Marty Ford.
Okay, great. Essentially, the statute exempts the ABLE account assets from being taken into account in looking at eligibility for federal means-tested benefit programs across the board. But it specifically addresses a few things regarding the SSI program and the Medicaid program. So I'm going to take a minute and point those things out. Regarding the SSI program, only the first $100,000 in an ABLE account will be disregarded for purposes of the SSI program. If your benefits go over that $100,000 limit, you don't lose eligibility for SSI. What happens is that your monthly cash payments will be suspended, and your eligibility will not be terminated, it will just be suspended. However, if your funds go over that $100,000, they can be treated as resources, and that will depend on whether you have other funds, for instance, that take you over that additional $2,000 in individual resources that already exist in the Social Security Administration's program. So that's an issue that may come up. I'm not sure if Ken Brown is going to cover that, but it may come up in his presentation. Otherwise, you may bring it up in questions later. The other point that is important here is housing expenses were initially in the statute intended to receive the same treatment as all housing costs paid by outside sources in relation to SSI. However, because the program was designed so that the person who is the beneficiary of the account is also the owner of the account, that somewhat changes the relationship of how these accounts work. And the new SSA instructions, or POMS, actually go into detail on how housing expenses will be treated, particularly if funds are withdrawn to pay for housing expenses in 1 month that are not actually used to pay for them until the following month. And so again, I'm not sure whether Ken will go into detail on that, but certainly something that we could cover in the questions. The next slide gets into some detail on what happens with Medicaid. And this is a very important distinction here. While the SSI program has a limit on of $100,000 for the ABLE account, the Medicaid program does not have that $100,000 limit in the account. Now, of course, all of the ABLE accounts are limited by the the program in the state in terms of the aggregate limit is the size of any of the college savings plans in that state. But the $100,000 limit does not apply to Medicaid, and Medicaid benefits are not suspended if the ABLE account balance exceeds $100,000. But there is what's known as a Medicaid payback, and if you're actually looking for this language in the statute, it's called the transfer to state. It's in a section called transfer to state. And this holds that when a beneficiary dies, and subject to any outstanding qualified disability expenses, so meaning after you've paid everything off, any assets that remain in the ABLE account can be used to reimburse a state for Medicaid payments that were paid on behalf of that beneficiary after the creation of the ABLE account. But the state would have to file a claim for those funds, and that's a very important point here, that it's only after the creation of the ABLE account that those benefits can be paid. These are not expenses that would be owed to the state for any services provided to the individual before that account had been established. And for purposes of this program for the ABLE accounts, the state is considered a creditor of the ABLE account, not a beneficiary, and this is very different. Both the creation of the services provided before the ABLE account was established and the fact that the state is treated as a creditor rather than a beneficiary of the account are specific statutory provisions put in there because of certain concerns that were raised dealing with trusts. And so this is very important information regarding statutory language that was put in there to protect the rights of the beneficiary.
So let's turn next to the questions of what are the tax implications of ABLE, and I'm going to turn to Stuart Spielman with Autism Speaks. Stuart?
Thanks, Michael. Michael, let's talk about first the federal tax implications. Generally, money in an ABLE program is not going to be taxed. The earnings in the ABLE program, contributions to the program, and distributions from the program, if used for qualified disability expenses, are not going to be subject to taxation. The money that goes into an ABLE account is post-tax dollars. These are dollars that you've already gotten your paycheck, and money's been taken from your paycheck, and you put money into your ABLE account from that pool of money that you have available. If money from an ABLE account is distributed for non-qualified expenses, there is a 10% addition to tax. Now, let's move on to state tax consequences, and these are actually, in some ways, more complex. There are many states around the country that have established ABLE programs. So far, we have 8 states that have provided some tax incentives, and the states are Iowa, Michigan, Missouri, Montana, Nebraska, Oregon, Utah, and Wisconsin. And Utah provides a credit. The other states provide deductions. And the rules on these are actually quite different. The amounts are very different. Who may be entitled to the tax incentive, that's different as well. And there's also another interesting issue that was raised by the recent change in the law that allows people to open up accounts outside their state, and that is there may be a tax incentive available for an investment in the state, and it may or may not be available if you open up an ABLE account in another state. Let's go on. So when will ABLE accounts be available? I guess this is in some ways the most interesting question of all. We're hoping to see, and we expect to see, some programs go online in the upcoming months, in the next few months. I think Chris began by saying 5 to 7 programs. I can tell you that the panelists in our secret movements actually keep talking about the exact number. We are going to see a number of programs go up and online and accounts open this year, and that is and that is really the critical point. So each state, in order to have an ABLE program, must pass authorizing legislation, or they have to, or they should, decide how to treat accounts that are opened out of state. It's not required that every state have an ABLE program. Most states are taking some actions, but one of the issues is what would be the treatment for tax purposes and for benefits purposes if an individual living in state A opened up an account in state B. So we are going to see and are seeing some interesting developments. Okay, next. Federal implementation. So there are a number of players on the federal side. Prominently, the Department of Treasury, working with the Internal Revenue Service, has released proposed rules through a notice of proposed rulemaking. That came out in June, and 2 notices, which are a type of informal guidance that the IRS releases. We expect final rules to come out in sometime this year, towards the latter part of this year. But it's important to note that the guidance from the IRS and the Treasury has really made the point very clear that programs can get up and running, and to the extent that there are differences between the federal scheme and state schemes, the service and the Treasury will work with states. One of the questions that frequently comes up is, does a state have to wait for the final rules in order to establish a program? And I think the IRS and Treasury have made it clear that the answer to that question is no. The Social Security Administration is another prominent actor in this drama, and they have released guidance on ABLE through their Program Operations Manual System and their own notice of proposed rulemaking regarding reporting requirements. We expect further guidance from other federal agencies, such as Centers for Medicare and Medicaid Services, Department of Education, Housing and Urban Development. Next.
We want to turn from some of these issues around when ABLE programs are going to open up and the tax issues Stuart just shared with all of us, to taking a closer look at where states are. And for that, let me turn to Heather Sachs with NDSS. Heather?
Thank you, Michael, and thanks everyone for having me. As Chris had mentioned earlier, since the federal law passed in December of 2014, many states have rushed to put in ABLE bills, and they've, many of them have passed. As of now, there are 35 states, including the District of Columbia, that have enacted their own versions of the ABLE Act and should be in the process of setting up their state ABLE program. In addition, most of the state legislative sessions have just started with the turn of the new year. Most of the remaining states actually either have already filed ABLE bills or are working on ABLE bills. So we anticipate that, close to 50 states, if not 50 states, will eventually have some sort of ABLE bill. Now, of course, they say some different things, and not all of them are bills to set up their own ABLE program, which we can get to in a little bit. We are also seeing some states that have already passed ABLE bills put in amendments to the bills that were passed last legislative session. Many of these amendments are technical fixes to the bill. Some of them, though, have been put in as a response to the elimination of the state residency requirements. There are some lower population states that are giving a second thought to developing their own ABLE program. But chances are the law that passed has imposed a mandate upon them to do so. So they're putting in some amendments to make it an option or form some type of an exploratory committee or, outright say that, no, they're not going to do a new program. In addition, a couple states are putting in amendments to try to sweeten their own ABLE acts that have already passed. And one such way that they can do that is to add a deduction to their program. for contributions to in-state programs. As has been said a couple times on the call, we expect that there could be anywhere from 5 to 7 programs offering ABLE accounts in 2016. I'm sure everyone is wondering which states are going to be first. Well, what we are hearing is that, you know, Ohio and Tennessee are most likely going to roll out sometime in early spring, followed very closely by Florida, Virginia, and Nebraska. Now, of course, I guess Will is going to be speaking about Florida in a little bit, and he can confirm, you know, if that's what he's hearing as well. But the exciting thing is that there will be several options available in the very near future. You know, while there will be a significant amount of consistency between these programs because they all do need to be qualified ABLE programs under the federal law, it's important to note that there will be variation from program to program. So, you know, you may not want to rush to open an ABLE account, you know, at the first program that you analyze. For example, the programs could have different investment options. They could have different disbursement options. Some of them may, you know, give the ability to use a debit card. Others, it may be kind of like a gift card type thing. And some might offer state tax advantages, such as deductions, as I mentioned before. So, you know, just note that as more programs come online, the marketplace will become even more competitive and beneficiaries will have more choice. Next slide, please. Okay, I just want to touch briefly on the notice of proposed rulemaking that's been discussed before. The first notice came out in June, right on time. We were all very happy that Treasury released this and gave a 90-day comment period followed by a hearing. During this 90-day comment period, many advocates from the disability community really had some very constructive conversations with Treasury and the IRS about certain clarifications that they wanted to see in the proposed regs, and also about, you know, certain ways that that we could, you know, help them to make ABLE programs better. We were very, very pleased with, you know, with the way that they took our guidance and advice. Then in November 2015, and you can go to the next slide, in November of 2015, the Treasury and IRS issued a further notice. We had actually requested, by we I mean, you know, many disability organizations as well as financial stakeholders had requested that they issue an interim notice on certain very pressing issues which directly related to how these ABLE programs are going to be developed and implemented. And in November of 2015, they did issue this notice. The notice dealt, this notice as well as the one in June, had dealt with several key issues. The first is regarding eligibility and recertification. Now, Marty explained a little bit earlier how you could become eligible to open an ABLE account, but the question is, how do you prove your eligibility, especially in the case of, you know, if you're not on Social Security, through that second mechanism of obtaining the disability certification. And so what Treasury has said in their latest notice is that designated beneficiaries can open an ABLE account by certifying under the penalty of perjury that they meet the qualification standards, and this would be, you know, getting a physician to sign some type of a form. But furthermore, the designated beneficiary will retain the form themselves and only be prepared to produce it if audited or questioned by the IRS or by the ABLE program. So this is very significant in that you know, it goes directly to privacy concerns as well. This is a form that you will, you know, receive from your physician. You'll certify when you open the ABLE account that you have obtained this form, and then you keep these forms in your own records. You do not have to file them with the state or make them public. In addition, the notice talked about transfers and rollovers, and I believe my colleague Stuart will talk about this in a little bit. But the notices did clarify that there could be no 529 to 529A rollovers from a regular 529 account to an ABLE account. But it also talked about the potential of being able to transfer from one beneficiary of an ABLE account you can transfer it to another family member who is also a qualified beneficiary. Similarly, if you were to move from one state to another, you now have the option of transferring your account, essentially rolling it over from one state's ABLE program to the next state's ABLE program. Or you don't have to do that. Treasury was very clear that you could choose to keep it in the first state of residence. And now, of course, it's a moot point now that the residency requirement has been eliminated. But you do have the ability to roll over one ABLE account to another one. For contributions, I think it's already been said that it's up to $14,000 a year by any amount of contributors. These contributions have to be in cash. So, you couldn't put real estate or something into an ABLE account. Now, in the distribution category, per the November 15th notice, it actually says that categorization of the distributions are not required. That means that the ABLE program does not need to make a determination as to whether or not you are going to be using the funds for a qualified disability expense. Again, this is incumbent upon the beneficiary to, make sure that you understand the rules, to keep good records, and, you will be certifying that you're going to use it in an appropriate way for a qualified disability expense. But the ABLE program will not be checking up on you. You are not going to need to get pre-authorization to get those funds from the ABLE program. And these funds need to be used for qualified disability expenses. Now, there is a whole list in the federal law, which includes many things such as education, housing, transportation, job training, funeral and burial expenses, legal expenses, et cetera. And in addition, they can be used for daily expenses of living, as one of the former speakers had said, which is interpreted very, very broadly by Treasury and the IRS. And, we're very pleased with that interpretation. The important thing to note here is that, again, you as the qualified beneficiary are really going to have to keep your own records. You're going to have to keep your receipts. You're going to have to categorize your own disability expenses and be prepared to produce those if audited. But you are not going to need pre-authorization, and you're not going to have to submit that to a program. Next slide, please. Okay, I think I've actually already covered the eligibility and recertification. As I said, we talked about how you are if you're the onset of your disability, and it's the onset of symptoms, not necessarily the diagnosis. So if the onset of the symptoms of your disability occurred before age 26, and you're a Social Security recipient under Title II or Title IV, you're automatically qualified for an ABLE account. If the disability occurred before the age of 26 and you are not currently receiving Social Security, you can obtain this disability certification, as we said, which will be a form filled by your doctor, which you keep and you certify under penalty of perjury that you have obtained. Now, the ABLE Act calls for periodic recertification requirements, and that's still up in the air in terms of, what states are going to require. It actually may vary by disability, so there will be some type of recertification necessary during certain time increments, but it will be very much the same way. This is something between you and your doctor that you are prepared to produce if audited. And now I turn it back over to Michael.
Thank you, Heather. What I want to quickly take us to is our representative from the Social Security Administration, Ken Brown, and to give us some of their insights and perspective on where we are with ABLE from the perspective of SSA. Ken?
We have an audio problem. Do we need to get
Ken, we can't hear you. You might be on mute.
Well, temporary technology challenges we hope we'll be able to fix any moment. In the interim, I'm going to answer...
Can you hear me now?
There we go. Okay.
Okay.
Ken, take it away.
Just a minor computer issue. Okay. As I said, we're grateful for the opportunity this afternoon to talk to you about the Social Security Administration's implementation of the ABLE Act. You've heard a couple of presenters talk today about our POMS instruction. It stands for Program Operations Manual System. These are the instructions we provide to all of our field offices for evaluating the ABLE accounts under the Supplemental Security Income Program. Now, those instructions are available to the public. If you go to the Social Security website under Program Instructions, and the appropriate reference is SI 01130.740. You'll be able to find instructions on everything that I'm talking about today. Okay. Some of the things, the objectives there have already been covered by other presenters, so if we could move on to the next slide. Okay, I think what you're most interested in hearing about is how the Supplemental Security Income will treat contributions to the ABLE account balances, and then subsequently money paid out or distributions from ABLE accounts. Okay. For SSI purposes, we will exclude from income all contributions to an ABLE account for a designated beneficiary. That includes any rollovers that are made from a family member's ABLE account. Now, that doesn't mean that contributions from third parties would be excluded from their income, or that contributions from the eligible individual themselves may not have an impact on eligibility. For example, if an ABLE account beneficiary is working and they have a payroll deduction coming out of their paycheck going into the ABLE account, that amount would still count as income. But if a third party makes a contribution to the ABLE account, that would not be counted as income to the beneficiary. For ABLE accounts established, they're all going to accrue interest or earn dividends or appreciate in value, and any of that account earnings will not be counted as an income or resources for the account beneficiary. The statute also provides that we will exclude up until and including $100,000 of the balance of the funds in an ABLE account from the resources of the designated beneficiary. And as someone mentioned before, any amount over $100,000 will be considered in determining the individual's resource eligibility. In the SSI program, our normal resource limit is $2,000 for an individual. So if an individual's balance in an ABLE account exceeds $102,000, they would not be eligible for SSI cash payments, but would go into a period of suspense where Medicaid could continue. Now, as far as account distributions, because the SSI recipient would be the beneficiary and the owner of the ABLE account, we don't count distributions from an ABLE account as income. It's the same as if you have a checking account and make an ATM withdrawal from your checking account, we don't count that as income either. So under our normal program rules, if you already own the money and then you move your money around, it's not income for SSI purposes. Now, there are certain situations where we will consider distributions to be a resource counting against that $2,000 resource limit for the individual. Now, what we have to distinguish between here is whether it's a qualified disability expense not for housing, a qualified disability expense for housing, or a non-qualified disability expense. If an individual has a non-qualified disability expense, if those amounts are retained beyond a month that they're received from the ABLE account, they will count as a resource. If an individual has a qualified disability expense for housing, any amount retained beyond the month of receipt would count toward the resource limit. But if an individual has a qualified disability expense that's not for housing, the individual can retain those amounts indefinitely and they will not count toward the resource limit, as long as the individual is eligible for an ABLE account, that distribution amount is not spent, and the individual can identify those funds. Now, what is considered to be a qualified disability expense for housing was things such as mortgage payments, property taxes, rent, heating fuel, gas, electric, water, sewage, and garbage removal charges. Those are the same thing, for those of you who might be familiar with the SSI program, those are the same things that we consider to be in-kind support and maintenance expenses for housing. Okay. Now, those are the things that we do not count related to ABLE accounts. And what will we count? Well, as I mentioned before, if an individual's ABLE account balance exceeds $100,000, we will count that amount over $100,000 as a resource to the individual. Okay, at that point, the individual's cash benefits would be suspended, but they would continue to be eligible for Medicaid. Okay, now, if they subsequently spent down the amount and it goes below the resource limit, they can become eligible for cash benefits again. Under our normal program rules, if an individual is suspended from cash benefits, after 12 months their eligibility terminates and they have to reapply. We do have a special rule for the ABLE accounts in that their eligibility will not terminate because of excess resources in an ABLE account. Now, if an individual is in suspension status because they have excess resources in their ABLE account, and then they become ineligible for any other reason, for example, they're no longer disabled, they have excess income in a month, or there are other resources other than what's in their ABLE account go over the resource limit, then their Medicaid would terminate or their Medicaid would end in that month. So you have to look at the reason the person is suspended. If they're suspended because of excess resources in an ABLE account, their Medicaid will continue, but if they're ineligible for SSI for any other reason, they aren't automatically eligible for Medicaid. Okay. Now, what happens in the situation where an individual has a contribution for a qualified disability expense and then they later spend it for a non-qualified expense? They change their mind or something else comes up. In the month that they spend their qualified disability expense distribution for another purpose, we will count the distribution as a resource in that month. So in the month of January, if you take an expense that, a distribution that you intend to use for a qualified disability expense, and you retain that, your distribution isn't needed currently, say in April, you use that money for a non-qualified purpose, then in the month of April, we will count that distribution as a resource toward your $2,000 resource limit. Okay. All right. Can we go to the next slide? Okay, in December of 2015, we published an advance notice in the Federal Register. One of the other provisions of ABLE Act that hasn't been discussed yet is that each state ABLE program is required to send a monthly report to the Social Security Administration indicating account balances and distributions made by the state ABLE program. We published a Federal Register notice detailing the information that we expected to receive as a result of that data exchange. Most of the comments were favorable. We did receive a few suggestions on tweaking the exchange and for some systems development. If you could go to the next slide, please. Okay. These are the items of information that we expect to receive on a monthly basis from the state ABLE programs. And this is for the purpose of helping us to keep track of individuals who have ABLE accounts and make sure they continue to be eligible for SSI. So their name, their Social Security number, date of birth, the name of a person with signature authority if it's different than the beneficiary, the account number or unique identification number assigned by the state program, the date that the ABLE account was open and then closed if it has been closed, what the monthly balance of the account is, the date of any distributions in the reporting period, the distribution amount, and the ABLE state account program name. Okay. As indicated before, the state ABLE programs will not be making determinations on whether a distribution is qualified, non-qualified, or qualified for housing. The Social Security Administration will be relying upon statements from SSI beneficiaries as to the intent of the distribution that they take. If we later have evidence that that intent changed, we have policy to deal with that, as I indicated earlier. Next slide, please. Okay, for 2016, we are working on developing a data exchange agreement, and during 2016, we will be working with the states in entering into data exchange agreements with them. Whether a program starts taking and opening ABLE accounts does not depend on whether they have a data exchange agreement with us. So that's not holding things up. As soon as we have the agreement in place and the system functionality is in place, we'll start receiving the data from the states, but that won't prohibit them from opening ABLE accounts for eligible individuals. The next slide, please. We're also in the process of developing frequently asked questions about SSI policy and ABLE accounts. We are working to put up an ABLE web page on the Social Security site that will include information about the SSI program and ABLE accounts. It'll have the frequently asked questions, and it'll also have some helpful links to individuals who have questions outside of the SSI policy. And next slide, please. For our next steps in implementation, as I mentioned earlier, we are establishing a computer matching agreement, which will be the same for all states that have an ABLE account. We are working on internal systems development so that if individuals have ABLE accounts, we'll be able to, and their SSI recipients will be able to track that information. We are meeting on a regular basis with our other federal partner agencies in sharing implementation strategy and getting updates on the status of their implementation. And we're working on with the state ABLE programs on data exchange components. And I think that concludes the information that we have right now.
Thank you, Ken. That is as complete a picture as I think has been made available publicly, and much appreciated. I want to quickly turn to Will Thompson, who is leading the efforts in Florida on the development of the Florida ABLE program. Will, you want to give us some perspective on what's being worked on in Florida, and you may have some comments on what you've heard so far today on the webinar.
Absolutely. Michael, thank you very much. Can you hear me?
Yes, sir.
Perfect. Well, thank you all very much for covering all the materials, and we agree, and we're implementing as expressed by the former panelist of what is involved with ABLE. So to make my comments not redundant, I wanted to talk a little bit about how a qualified ABLE program looks at these requirements and then provides a good product to its customers. So first, looking at understanding our customers, we saw 3 potential areas where an individual with a disability or their family may come to us for an ABLE account. They may be seeking a long-term financial planning account. You hear a lot of analogies to a 401k, a 529 college savings program, HSAs, accounts that serve a purpose for saving funds tax-free for future use. We also see the benefit for individuals who are either already on SSI or who would like to get on SSI, but due to their assets have been unable to qualify. And finally, for the families that already have a special needs trust in place, an ABLE account may be a good cost-effective way to provide additional funds at a little bit easier perhaps to access those funds and a wider variety of expenses to use them for. So we saw that as potentially assisting customers. Then we're looking at what kind of questions customers may have, and we see that based on the personal circumstances, individuals may have several questions. For example, the ownership does belong with the individual with the disability. They are both the beneficiary and it's their funds. However, where the individual with the disability has a caregiver or a parent or legal guardian, there's questions about, accessing those funds and what rights and abilities certain individuals have to withdraw those funds to make sure that the funds last as long as possible. With the qualified disability expenses, we also have questions about, well, since they're qualified and there's other ones that don't qualify, what are examples of expenses that do not qualify? And so in some of our research, we've seen, questions about the categories. All right, there's a category for education. Is that any type of education or just certain types of education? As expressed earlier by panelists, it is meant to be construed broadly, but we do see some questions coming up very initially of, is there any more detail? Is there any catch here? So that would be its questions. We have received a lot of questions, what about entertainment? If we were going to go to Disney World, if the individual with disability goes there, would that qualify? What if someone goes with them? That was a question we had coming up a lot, was about entertainment. Of course, there's also other personal circumstances, other programs that an individual has and the impacts with ABLE, or other savings vehicles that they utilize and how it interact with ABLE. So there are several questions that will still be out there, and we see this as a learning and growing process with individuals seeking information from a variety of trusted resources. So we're reaching out from Florida, partnering with advocacy organizations that you hear on the call today, other state agencies and programs to try to collaborate for frequently asked questions to help provide some of this information, and reaching out to lawyers and financial planners, all sources of trusted resources, because this is a new program and we understand that there are several questions, and several of those questions we can't answer. However, we're trying to partner with those that can help provide guidance or to help get the clarity that a lot of individuals seek. With respect to opening an ABLE account, when the programs are open and available, we would anticipate 3 main areas that you would want to consider. First is who is going to be administering the account. This could be the individual with a disability. However, it could also be a parent or a legal guardian who is utilizing these funds, say, for example, for a minor. So you need to consider who is going to be in charge, who will be able to withdraw the funds. That person does not own the funds necessarily, because only the individual with the disability owns it, but they're acting on their behalf. So when you go to sign up, you're going to want to consider who do you want to have that authority. And for those that are making decisions about estate planning for their child with a disability, you're going to want to consider who will have access later down the road. Second is the beneficiary eligibility. You're going to be anticipating to be able to self-certify, as indicated earlier. So you'll be looking at, does the age 26 apply for the disability? Does the individual, could they, if they're not already on SSI, SSDI, could they, based on those standards, receive SSI, SSDI based on disability? That will be something that the person completing the application will have to certify under penalties of perjury. So that is something that you would want to know in advance if you qualify or not. Finally, looking at the investment options would be another piece to anticipate in completing an application. We do not anticipate these applications to take very long to complete. They should be able to be completed in under 15 minutes. However, you want to be able to know the information beforehand so that you can complete that application or ask any questions that you have in advance. With respect to maintaining an account, we anticipate qualified ABLE programs to offer online access with online functionality to allow you to easily maintain the account. We would also anticipate e-notifications about certain transactions occurring on the accounts. With respect to Florida's ABLE program, we're working diligently to incorporate everything that you heard today to be able to launch by July 1. And we have provided some contact information with our email address and our website, myablesavings.com, for some additional information. But I want to leave some time for Q&A. Want to touch on a few of those. We'd be happy to answer any questions as well.
Thank you, Will, and that gives us, again, takes it from the federal level and the big picture down to, again, what one state is thinking about and planning for. That gives us some perspective as well. Many questions have poured into the chat box. We have also as well questions that were pre-prepared. So let me go ahead and jump in. One question that came up, and Will, I'm going to ask you this question, but I'm also going to ask our other panelists if someone else wants to jump in. Some people wrote in the chat box, we know our state is moving slowly in putting together the elements to open an ABLE program. What if my state doesn't open an ABLE program? I understand that I could look at Florida, I could look at Ohio, Virginia, other states that are opening, we know this year. But would I be losing out on anything that by in fact my state doesn't move forward? And I know, Will, that may put you in a little bit of an awkward position, but I wanted to ask you as someone who's putting together a state program, what's your thoughts about that?
Michael, it's an excellent question, and I realize that is an issue that many individuals will face with what sounds like less than 20% of the states having a program in 2016. So the question would be, if I need to put away or want to put away up to $14,000 in 2016 and need to act, and my state does not have an ABLE account, is there somewhere else that I can look to put the contributions? And to the extent that states do accept nationwide, there should be options to open up in another state an ABLE account so that you can put the $14,000 in. In the future, if your state were to open an ABLE account or offer a certain tax incentive for their state's ABLE account, or maybe a deal with another state, you could always look at performing a rollover. While there are limitations on the timing to ensure there's no tax consequence, the 12-month period, fortunately Congress has anticipated that families may want to move funds. So there could be an excellent opportunity to open up an ABLE account with a state that's available to you, and then you can always watch and look for your state and check for the tax deductions and look perhaps to be able to roll over in the future if that's appropriate. Hopefully the states that have rolled out that you identify do provide an excellent option for you and that you'll be happy and stay with them, but you are able to perform a rollover to another state at a later time, given that caveat.
Thank you, Will. And I think Stuart wanted to also answer that a little bit. You know, again, I think what's implicit in this question that came in is, sure, a person could look at other states, but what might they be losing out on that their state might have done?
So I think there are two aspects of this that I would identify. One is the incentives, and some states are providing tax incentives to their residents. Some states provide incentives to their residents and to people who invest in accounts out of the state. But most incentives are probably localized to in-state programs. There's also an issue, and I think this is important for any state, whether it establishes its own ABLE program or not, is to make sure that the benefits that an individual receives in that state are protected. There may be a question if an individual in state A opens up an ABLE program in state B, and that individual in state A is receiving some sort of state-based benefit. There would be some uncertainty, perhaps, regarding that individual's continuing eligibility for benefits. And then there's another issue which in some ways I think you know, Will's comments bring up, but each state has a particular and unique expertise. Each state understands its own citizens with a special knowledge of dealing with constituents over the years. And I think that that is very important, because what we want to do is we want to, those of us from the panel, we want to make sure that people get the best information. And some of the answers you know, may be local answers. So I think that that is very important in going forward. You know, will an individual in a state be able to address the questions he or she has about his or her circumstances? So that's the way I would answer the question about in-state versus out-of-state, program versus no program.
And Chris would like to add, and then let's get to other questions.
Right. I just want to expand that a little bit. I know that we had a question, Stuart, you might be the best to answer this, and Will, I'm curious your response as well. And Heather, I know you've done some work around this. There are states that are looking at, and this comes from a question from the great state of Alaska, that got put up. There's states that are kind of stepping back as a result of the elimination of the residency requirement, not to say, no, we're not going to build a program, but just to say, how does this affect us moving forward? Now, I know that the concerns that Alaska have are also concerns of other states who might be saying, wow, our population isn't that great, so we're afraid we're not going to get to a capacity to where we can offer a reasonably priced benefit to our qualified beneficiaries. Stuart and Will and Heather, what would you say to these states that are curious about what are the benefits that might be lost to their residents if they decide not to move forward in building their own ABLE program, despite the fact that their residents would be able to go elsewhere?
Well, it's never been the case that a state has to establish an ABLE program. Even before the law changed, the federal government did not require states to establish an ABLE program. But what we saw in 2015 is that the majority of states actually went forward to authorize programs. I think that that reflects, in part, the idea that a state program is the most sensitive way of addressing the needs of state residents. Now, it is true there was a home state limitation until the end of 2015, but I think that my experience with states is that each state has a special understanding of the circumstance of its residents. So I would be concerned that states that decide to be less active here may not be able to address all of the questions that families have. You know, we look at ABLE as providing a new tool to families, and I would hope that states engage in this enterprise to give people with disabilities and their families the most tools available.
Thank you.
The only thing, this is Michael, and I would add to that is even when a state doesn't open an ABLE program, I hope that the different public agencies will see a part of their responsibilities to put funding aside to train their staff, support coordinators under Medicaid, VR counselors, transition education staff in the school systems to understand that this is an option, just as Stuart explained, that needs to be considered by individuals and families.
And, you know, I would also add, Michael, that we should talk about the information available to different people. We're talking in some ways as if information is just generally available, but we know that some people may have more difficulty getting information. Not everyone, even in 2016, has access to a computer or a smartphone. How do people get information when their circumstances may be such that they live in less accessible environments? How do we get information? How do we get information to people who have lesser means? How do we bridge language barriers? All these things are very, very important and in I think, a state's decision on what to do with ABLE.
Thanks, Stuart. And that kind of leads into another question that came in. Will there be federal resources to support state implementation? And that's a question. I'm going to throw it back to Ken. You don't represent the entire federal government. You probably wouldn't want to. But from an SSA standpoint, you've got millions of beneficiaries who will be eligible to open ABLE accounts. Does SSA have any projection in the future about resources they may put into some of the issues Stuart just raised about different types of education and outreach that reach different literacy levels, language barriers, communication barriers? Is this something SSA is contemplating?
Well, first I'd note that the Department of Treasury and Internal Revenue Service was tasked with the primary implementation of the ABLE Act, and they have primary responsibility for it from the perspective of the federal government. At SSA, we are currently incorporating some ABLE information into our public information materials. We've already got a couple in draft, and we'll be working on some additional things. I mentioned we are going to be putting up an ABLE webpage on the Social Security webpage, and but primarily, I think we're going to be relying on the state programs and the advocacy community to disseminate a lot of that information because they have a lot closer relationships with a lot of the eligible individuals for ABLE accounts.
Thank you, and it's a question I know we continue to discuss across the federal government. It's a shared responsibility, public and private. Treasury and IRS has the lead, but we will continue to push at all levels of government, this is a massive undertaking, as I think panelists have shared, around education and outreach that can be meaningful to help people make informed decisions. I want to go to several questions we may be able to answer quickly. The question came in, so this is not like a 401k where you can take pre-tax dollars and put it into an ABLE account. That is correct. Correct meaning this, as Stuart shared, this is post-tax dollars. It has to come into you as income, and then you have choices to be made as whether and how often and how much money you personally, or you get other people to help you to put a contribution into your ABLE account. So I wanted to answer that one. We had another question which I think will come up a lot once the ABLE accounts are open, and that is, will my ABLE funds have to be accessed before, let's say, I'm a Medicaid waiver recipient, before waivers funding, public funding, is going to be used to support me, since the waiver funding is a funder of last resort? I'm going to turn to Marty, who may give us a little insight. We don't represent the federal government. It's just our view of what's the answer to that question.
Our answer is, I think I'm speaking for everybody here, we think the answer to that is no, because the intent of the law was to ensure that the ABLE funds were protected and that people were eligible for the means-tested programs, regardless of the money in the ABLE accounts. But that is clearly a question that must be addressed by the Centers for Medicare and Medicaid Services, or CMS, and that needs to be clarified between CMS and the state Medicaid agencies. And we have actually already asked that question of CMS and requested that that clarification be made. So we think the answer is that you should not have to access your ABLE funds before home and community-based services are available, but we are also pursuing a clarification. So.
And again, this relates to funds coming out of your ABLE account and what is a qualified disability expense. I'm going to send this one to Stuart, who's talked often about this example. Funds are going to be used to purchase technology. If the technology is like an iPad, so the beneficiary is going to use it, but other members of the family may use it. Is that a problem? Is it still a qualified disability expense?
So there's actually an example in the proposed rules concerning this. I believe the example concerns a smartphone, and smartphones have multiple uses, and many people with disabilities use devices like smartphones to help them deal with day-to-day issues. And the service and Treasury have understood that these devices are an important part of how people negotiate the world. And they've made it clear that these devices can be used as part of qualified disability expense distribution.
Thanks, Stuart. This is a question.
Excuse me a second.
Did someone else?
Yes,
go ahead.
Social Security. One thing I didn't mention during my presentation, if you take a qualified distribution from your ABLE account and you use that to purchase something that you need related to your disability, there is no specific exclusion in the ABLE Act that would exclude those items. For example, you take a distribution to purchase a specially equipped vehicle. There is no specific exclusion for the SSI program for that vehicle. However, under our normal program rules, we really couldn't come up with any examples of things that you purchased related to your disability that would not be excluded for the SSI program. For example, under the vehicle exclusion, under the household goods and personal effects exclusion, if you needed, a wheelchair or something like that, that would all be excluded under our normal program rules.
That's helpful. Let me quickly go to a few more questions. It's pointed out by one of the folks, put the comment in the chat box, is it true that the disability definition for ABLE is actually the childhood SSI standard, which is in fact less stringent than the adult standard? I'm going to ask Marty to comment.
Okay, actually the language that's used for the disability certification did use the language of marked and severe functional limitations, which actually did come from the childhood statutory definition for childhood disability. But it was used instead of the substantial gainful activity part of the definition. So it substituted for that work criteria in the definition. It did come out of the childhood definition. It does not refer to childhood because it does not use an age. It refers to any age. So it substituted for the work requirement and uses marked and severe functional limitations. But I do want to challenge the part of the question that says that it is a less stringent standard than the adult standard, because I can't get into all the technical reasons, but it is actually not a less stringent standard. This is all at the listings level, as I mentioned, and again, we could do an entire webinar that would take an entire day, actually, to get into all the technical details about that. But the answer, the basic answer is yes, it came out of the childhood standard, but it applies to adults.
And I want to take this one. Heather, hopefully you're still there. When I open in one state an ABLE account, but then I move on to another state, do I have to open a new account in my new state?
No, you do not. You have the option of keeping the old account, opening a new account, or even seeking out a third potential possibility. Keep in mind, though, that you can only have one ABLE account at a time.
Right. Here's a very good question. Will the physicians, so I'm not on Social Security, so I'm looking at the alternative tests for being eligible for ABLE. Will physicians know what form to use as a certification of disability as to the level Marty just talked about? Is there going to be a specific form? It's probably a Treasury IRS question, but we have talked with them about it. And Marty, you want to try to answer that?
Well, yeah, Will may have a response to this. Some of us have urged that the IRS actually create a form that would be used nationwide so that we don't have 50-something different forms for this. It's possible that the states would actually, or each program would have its own form, but it's not a form that exists now. It's not something that's out there floating in the universe now that physicians would already have available, because there aren't any ABLE programs that you could sign up for yet. It will be ABLE specific, is my point. We just are not sure yet where it will come from. Yeah. So, Will?
Will, do you have any comment you're able to make at this point in terms of how Florida may tackle that?
Sure. For eligibility with a diagnosis from a physician, we're relying on self-attestation. So we haven't seen any specific form that the IRS is going to dictate. So we're going to provide the information, say you want to be able to have sufficient information if the IRS does ask a question that you could support it. But if the IRS has a specific thing that they would like to see from an individual, we hope that they will create a form. We would not anticipate actually creating a form, since we're not going to be collecting that information, so that we don't have someone assuming, this is an IRS form. They just need to be able to substantiate if the IRS does ask. And Michael, can I add a couple more points, please?
Please,
there was,
go ahead.
I just saw a couple of questions. Just wanted to confirm, yes, you can have a special needs trust and an ABLE account. We do believe that you could fund an ABLE account from a special needs trust, but that would be subject to the $14,000 limit of contribution. Along with that, there was a question about nonprofit gifts. Could we get money from other sources? Yes, ABLE accounts can receive contributions from a variety of sources, but your limitation is still $14,000 per year. So whether that's coming from a special needs trust, not-for-profit, family, or from yourself, it's a $14,000 limit currently. There was a question about Medicaid repayment. That is not limited to just one state. So if you were to open in one state and live in another one or move, all the state Medicaid programs that provided Medicaid benefits could still seek Medicaid repayment. That's our understanding. And the final thing I wanted to touch on real quick was there's a question about what tax forms a state would be filing to the IRS. We're required to file Form 5498QA. Basically what that means is every year we have to tell the IRS, here's the individual, here's their social, here's the amount of contribution, here's their account balance, here's their basis of eligibility that they told us about so that the IRS can validate. Additionally, whenever there's any withdrawals or distributions from the account, for that year, we'll have to file a 1099-QA with the IRS. And that's what says, here's how much was withdrawn, here's how much of that withdrawal was due to earnings, and here's how much was due to contributions, so that the IRS has that information. That's the basis for you to determine if your expenditure is qualified or not, to determine whether you are taxed on those earnings or not. Both forms, whenever we send them to the IRS, we supply a copy to the administrator, who may be the individual with a disability, or if there's someone else caring for them, that individual. Thank you, Michael.
Will, I'm going to just keep you online for the next question, which came in several different forms, but certainly individuals and families across the country want to know this, and that is, can you give us any sense of is there going to be an initial fee to open an account, and any sense of the parameters of other aspects of fees related to distributions or any other part of opening and maintaining an ABLE account? I recognize, not to put you on the spot, that these will be some of the differences from one state to another in terms of ABLE programs, but to the degree you can share any insights at the moment, we'd appreciate it.
Absolutely, and I appreciate that. That is something that our program is looking at. Obviously, we want to provide the most cost-effective solution for our participants that we can, as I'm sure every state has. The varying factors of what is offered. For example, there is prepaid or debit cards. There are costs to creating those cards, to dispersing, to even maintaining, even when they're not being used, and then ultimately if they're lost or replacing them. And the new chip technology that everyone's seeing in the credit cards they're receiving, those cards are about twice as expensive as the other cards. So there are a lot of issues that state programs are looking at in determining, what cost that they may have to charge for an ABLE account. And we're still assessing. I'll just say that to be forthright, and I believe most other, if not all other states are still assessing, because that's one of the last things that a state wants to cover, because you don't want to go out with a number and then have to modify it. But we are very conscious of how important it is to offer as low of a cost product as we possibly can to ensure that all of our participants enjoyed all the benefits that come with an ABLE account, regardless of the reason. But I wish I had more specifics. MyAbleSavings.com, as soon as we have those, would be happy to share, and we fully anticipate that that individuals will be looking to the ABLE National Resource Center and other trusted sources to do a comparison to ensure that they receive the best value when they are signing up for an ABLE account.
Thank you, Will. I want to thank our presenters, Marty, Stuart, Heather, Chris, Will from Florida, and Ken from Social Security for being so much able to share so much information today. It's a work in progress. We do hope in the months to come, as soon as several states open ABLE account programs, we're going to see if we can invite them on one panel to talk about the unique differences, the particular value add of their program versus the next state. And we'll have you back, and we hope to invite Ohio, Virginia, and other states to be on with us. Would be an interesting presentation to help inform people nationwide. But please, the most important thing about ABLE is continue to look for information from trusted sources. You're part of one of the organizations that are on with us today, Autism Speaks, the ARC, NDSS, National Disability Institute. Whatever the organization is, if you have a long history with them, ask them for help in understanding in making informed decisions. We will have a website open up next month at the ABLE National Resource Center, ablenrc.org, which we be available to anyone in the country, where we'll begin to make these comparisons objectively. We won't be able to tell anyone this is a better program than that one. We can simply offer objective, independent information on what the choices are, and we'll continue to support you with updated information from CMS, Treasury, IRS, and Social Security, and other federal agencies as we learn about them, as well as the states. Thank you so much for being with us today. Hopefully you are more informed than when we started. I think we've shared a lot of information, and we look to continue to doing that with you. Have a great afternoon. Take care. Bye-bye.